Here with Aaron Clark with Summit Community Bank. His office is located in the greater Lansing, Michigan area. Aaron, let's talk a little bit about some of the misconceptions and differences between pre-qualifications and pre-approvals and why they're important.
Okay. Well, in most situations, before you go out looking for homes, you want to know what programs you qualify for, how much you qualify for, so that you're looking in the right price range. And your realtor is going to want to know before they start showing you homes that you are a qualified buyer. There is a difference between a pre-qualification and a pre-approval. A pre-qualification is where we do review your credit report, your income, your assets. That is done typically on an automated level through automated underwriting, as well as I review it as well. And that's more of a pre-qualification where, based on everything that I see, your credit's evaluated, your income, your asset, your debt to income ratios, I feel comfortable in issuing a pre-qualification certificate so that you can go out and start looking at homes. Now, a pre-approval is a little bit different, where the approval has to come from an underwriter, and typically an underwriter is not going to review a file until we have a property identified. We have all of the income and assets required. That means it's been through the underwriting process, which is not typical in today's market. It's not practical from a time standpoint to have an underwriter go through that extensive of a review of a file just to let you put an offer in on a home. So that's a big difference, and a lot of people just don't understand that.
And the terminology we see out there a lot is there's a lot of realtors that when you submit an offer in on their listings, they want a pre-approval letter, and so they've been called pre-approval letters for a long time, but really all they've been is pre-qualification.
Yes, you're exactly right. We used to call them pre-approval letters. By the letter of the law, I don't know that was 100% accurate, but they are technically pre-qualification letters, which we have since had some guidance and corrected that terminology.
And earlier in this, you mentioned identifying a property. You mean they found a home and written an offer on it?
Correct.
Okay.
That's correct. Because along with that property comes, specific tax information. Is there anything, improvements that need to be done to the home? You're going to know what type of loan program, what their debt, what that monthly payment is going to be, or have a real good idea, so that they can evaluate the whole scenario.
Wonderful. Well, Aaron, we appreciate your time again, and you have a great day.
Wonderful.